I'm Dan Fitzpatrick at StockMarketMentor.com on Monday, April 30th. And look, today we're going to look at Monster. This is if you just didn't happen to see it today, the stock just absolutely soared today. In fact, stock got halted on some kind of rumor or news or whatever that Coca-Cola, Coke, would be buying these guys. So you can see what happened. That turned out to be false, and the company, Coke, came out and said, guess what? Not true. We're not looking at buying them. You can pretty much see exactly where they said that, right about there. And the stock really, really got crushed. Here's the thing. This is a great example of why it really doesn't pay. I mean, sometimes you can get in early, but typically it doesn't pay to trade this kind of crap, and I'll tell you exactly why. Because unless you were one of the guys that happened to get in here, trade it all the way up. You know, this is a 5-minute chart. 15 minutes this stock went up. If you got in after 80 bucks or so, you think, why? Why are you getting in? Because, well, Coke might be Coke might be buying the company. There, English, how's that? That's good language. Coke might be buying the company. Well, what price are they going to pay? Well, let's see. Golly gee, you know, on Friday the stock closed at 65 bucks. So are they going to pay like what, a 35% premium on this? Maybe so. Are they going to pay 50? Doubtful. The point is, after the stock runs up like it did, and you're sitting there 15 minutes into the thing looking at 80 bucks and you're saying, I'm going to buy some stock here. Coke's buying these things. That's great. What is your upside? What's your potential upside? Do you think they're going to pay 90 bucks? Are you really getting in on something that you want to trade? Or are you doing a little philanthropic work? Are you being really charitable and helping the guy who got in here, helping him book that profit and close his trade out? Buy it at 65, sell it at 80, about 15 minutes. Annualized, what's that return? A gazillion? So the point here is, and then we'll get into what to do with the stock now. The point is, you don't want to be like a largemouth bass just snapping at any shiny object that's floating by, because sometimes, you know, it might have a pretty big nasty hook on the end of it. So don't do that. When you see these big movers like this, you know what? Just consider it a missed opportunity because you didn't get the information early. Do not help the guy who did get the information early. By the way, whether it was illegally gained or whether it just happened to be that somebody was sitting there watching their screen first, don't be the guy that lets that guy out of his trade. Let somebody else do that. Play the greater fool theory. You don't want to be the greatest fool. Right now, the greatest fools are sitting here with a cost basis of about 80 bucks or so. So what are we going to do with the stock? First, let's look at the weekly chart. Doesn't look a whole lot different than the daily chart. So what I view this as like a complete washout. Guess where the average cost basis of short-term traders is? Well, probably somewhere up here. So this stock has some kind of a ceiling. Just from supply, just from folks who bought here, who just want their stinking money back, and they promise they'll never, ever, ever, ever do that again until, of course, the next time when they'll make the same mistake again, because that's what traders do. So there's a lot of resistance up here. I doubt the stock is going to really, really push high. So with all this resistance up here, though, does that mean the stock's likely to come back down and you should sell? I don't think so, because didn't it kind of make sense? Think about it. Didn't it kind of make sense for Coke to take a run at Monster? I mean, this is kind of a monster trend here. Everybody's drinking the drinks. Some days when I'm talking really fast, I'll bet you think I drink them too. So it makes sense for somebody to come in and buy this company. That's why it doesn't make sense to sell the stock as long as the uptrend continues. So I would use this candlestick here, and normally a technician would look at this and say, well, this is one big tombstone doji. This is one big nasty candlestick pattern that you've got to sell because the stock's going straight to zero. I mean, this was a big climax buy. This was not a climax buy. where everybody that was waiting to get in on the stock, waiting and waiting, finally got in. A lot of folks that traded here hadn't been waiting to get in on Monster at all. They just saw the news. CNBC even reported it. I happened to be watching it. CNBC reporting it, but the stock was halted. And then when the stock started trading again, well, you know what happened to the stock. You saw the intraday action. So we don't treat this as a big tombstone doji. What we do is we treat this as kind of a little bit of a buffer. We treat it as a low, squishy ceiling that's going to keep the stock, because of all the supply from the folks who wish they hadn't bought, it's going to keep the stock from moving a lot higher. Probably meander around a little bit, but don't you think that just gives you an opportunity? So what I'd suggest doing is, if you've been looking to buy Monster, go ahead and do so now, as long as it stays above the 50-day moving average, and that's about, $5 below where it is right now. As long as it stays above that level, then your position is still pretty good. If it starts trending below there, then you want to consider exiting the position. But until that happens, I think I would just stay long. Okay, members, get over to the strategy session. We've got about 20 stocks I want to look at.